Hello students, how are you? I hope all of you are well, and I hope that you had gone through all the lectures of this topic, your admission of partner. Today I have come up with a new video in the same series of the chapters which we are going admission of partner. So let's start with some of the things. Before starting your new topic today, I would like to recapitulate the things till now what we have covered in this chapter, like your sacrifice ratio. This we have covered, and goodwill. Goodwill means anything in return of that the partners gets from you, means profit share out of from that shares, because he is getting that share, so that's why in return of that person has to pay amount or share of goodwill. So that we need to understand what would be the treatment of this share of goodwill. Then we understand revaluation of assets and liabilities, that the revaluation of assets and liabilities are required in that case. Then treatment of reserves, we just understand a bit of this topic. Then we solved some of the questions regarding your sacrifice ratio. Sacrifice ratio, we know old minus new. And treatment of goodwill, there are a number of entries, because once that new partners enters, that partner is paying some of the shares, so might be there are number of kind of transactions are required to enter in between. First is, if that partners pay share of premium, means goodwill shares privately, then I told you that there would be no entry. Then next is, we did goodwill brought in cash. If that partners brings goodwill share in cash, then entry come cash to premium, then premium to sacrifice, partners and sacrifice ratio. Then if that share which is given to those old partners, means cash, if those amount of cash withdrawn by old partners, the entry comes sacrifice partners capital account debit to cash or bank. Then if that partners doesn't bring any cash in the amount of that premium for goodwill, means in the share of goodwill, then entry comes new partners capital account or current account to sacrifice partners capital account. So these things we did. Then we solved some of the questions, like we did that questions, means by which you understand how to calculate your sacrifice ratio. And today we start with one or two questions in which we understand how to treat the goodwill if he brings cash or doesn't bring cash. Let's start with this question. X and Y are partners. Two partners are there sharing PSR. PSR is the ratio of 3:2, profit sharing ratio. They admit Z into firm for 1/5 share. So Z share is 1/5. Z acquire his share from X and Y in the ratio of 2:3. Means this information is that given for the calculation of your ratio, means sacrifice ratio. How would you calculate this? That we did earlier. Goodwill is given 30,000. If one thing you need to understand, if valued word is given, valued means this is the goodwill of firm, not for the partner. Z brings in rupees 1 lakh through check. So this is cash or by check that person brings as his share of capital. So entry comes bank to capital, but is unable to bring the amount of share of goodwill. Now this is important thing, unable. It means he clears that this question relates to not for a premium, because he's not giving any share of goodwill in cash, rather than it is specifically mentioned that he is unable to bring the amount of his share of goodwill cash. It means we have to pass the entry other than cash, means we have to adjust the share of his goodwill into his capital account or current account. That depends on the question. If capital are fixed, then you can make that entry into current account, otherwise you can pass it into capital account. So it is mentioned capital are fixed, so that's why we pass the entries from through current account. First is when goodwill is not appear in the books. It means he's talking about old balance sheet. It means there would be no goodwill in the existing balance sheet. Next, he said when goodwill is appearing in the books at 15,000 means old goodwill is there. Old goodwill is called goodwill is there means your existing balance sheet. So let's start with that. First entry, what he brings 1 lakh as his capital. So entry comes bank account debit to Z capital. Okay. Then it is mentioned that goodwill share 30,000 is given, that is for firm, but we have to calculate his share. 30,000 multiply 1/5, it comes 6,000. So it is mentioned capital are fixed, and it is also mentioned that he is unable to bring in the amount of his share of goodwill. It means there is no point of premium for goodwill, so we have to adjust the share of that partners into his current account because capital are fixed, it is mentioned. So entry comes Z current account debit to old partners current account in the ratio of sacrifice ratio. Okay. So first we have to calculate 30,000 multiply by 1/5, it comes share of that new partners goodwill. But it is mentioned that he doesn't bring goodwill in cash, so that's why we have to pass the entry through current account or capital account. And next question, it is mentioned next case 15,000 goodwill is given. This is called old goodwill. And one thing just to keep in mind, once old goodwill given in the books of accounts, what you have to do, you just have to write off that goodwill if nothing is given other than this. So what you can do, goodwill balance is debit, make it in credit and transfer to old partners, because old goodwill means it exists, it is given for your existing balance sheet. It means existing balance sheet only two partners were there, X and Y. So that why it is goes to two partners, X current account debit, Y current account debit to goodwill. Old ratio. Okay, remember this. Old goodwill always transfer into old ratio to old partners. So this is good thing. Old goodwill means old balance sheet, old goodwill, old partners, old ratio. Okay. Next is bank to Z capital. This is same, this entry. Okay. Then next same entry, Z current to Y, X current to Y current. I hope you understood. Next we have one more questions over here where it is mentioned balance sheet is given X and Y. They agreed to take Z as a partner from 1st April 2018 for 1/5 share in the profits of the firm. Z brings 60,000 as his capital. Give entries to record goodwill. Now, give journal entries to record goodwill. Now, goodwill means two things is there. One is goodwill is given your existing balance sheet that I told you earlier questions. It means this is your old goodwill. You have to divide this old goodwill means old balance sheet to old partners in the old ratio. This they did. X capital, old partner, X and Y. Two partners are there, X and Y. So X and Y debit to goodwill. Okay. You just have to write off this goodwill. Entry comes 15,000 X capital account debit, 10,000 Y capital account debit, goodwill credit as it is mentioned in your old balance sheet 25,000. Next they ask for 60,000. They said he brings his share of capital. So entry comes cash to Z capital. This we know. But they ask for entries to record the goodwill. If you see in full questions, other than this goodwill, there would be nothing given in this question regarding goodwill. So what you have to understand, there is a point of hidden goodwill in your questions that you have to calculate. Means goodwill is there, but goodwill is hidden. So that we have to calculate. How could you calculate goodwill? Let's see. Hidden goodwill. If it is nothing is given, but they ask for treatment of goodwill, then you have to calculate first goodwill. Means this is, you can say, next thing or next type of goodwill, which is called hidden goodwill. Let's see the calculations. First, you have to calculate total capital of the firm, net worth or total capital. How could you calculate? Capital which is given by new partners multiply by his reciprocal share. It is mentioned capital multiply reciprocal share. Reciprocal means you just reverse that share which is given. 1/5 share it is given for new partners. You can see 1/5. So once you make it reciprocal 5/1, it comes your total capital. What do you have to do? You have to deduct. What? Total adjusted capital of old partners. This is your total capital of firm. What do you have to deduct? Listen it carefully. Total adjusted capital of old partners plus new partners capital. It means you have to adjust new net worth of the new firm. This is your total capital of the new firm on the basis of capital brings by new partners. You have to adjust total adjusted capital of old partners plus new partners capital. Now total adjusted capital of new partners, how could you able to calculate? Prepare capital account of old partners. Two partners are there, X and Y. Prepare their capital account. Capital account, we know that. Capital account, how could you prepare? This is given. 48,000 capital of X is given. 32,000 capital of Y is given. Reserves, P&L, two informations are there. And third is goodwill written off. Once you make it, automatically your adjusted capital comes. 48,000 plus 32,000. This is capital of both the partners. Once you transferred reserves to them in old ratio, 35,000 plus 20,000 minus this 10,000 minus 20,000 for existing goodwill. This 10,000 is your deferred reserve. This way will do in next. This is advertisement expenditure. Fictitious assets you have to write off, so that's why it would be deducted. Plus 60,000 new partners capital. Once you deduct this, 140,000 come. This 140,000 is called your goodwill. Value of goodwill means hidden goodwill. But this is goodwill of your firm. Remember this. Because I told you earlier, when valuation comes, once you calculate goodwill, it means you are calculating goodwill for firm, not for the partner. So that's why once you multiply 1/5, it comes share of goodwill of new partners. So entry comes Z capital or current account debit to X or Y, because it is mentioned, or it is specifically it is not mentioned that he brings goodwill share in cash or not. So that's why you can transfer. You can assume that he doesn't bring goodwill in cash. So that's why transfer to capital or current account. Entry comes Z capital account debit to X or Y. Got it? So this is called your transactions for hidden goodwill. Next, in next video we will discuss your revaluation account and capital account. Means till now we have discussed about your treatment of goodwill, calculation of ratio, sacrifice ratio, new ratio, how would you calculate, and some of the questions regarding treatment of goodwill, which is very much important for you, because once you are going to start your full questions, means lengthy questions, then that is very much required to understand the basics of your treatment of goodwill as well as your ratio. So hidden goodwill also, yes. So these are the things we know now. Then in next video or next one or two videos, okay, whatever there, so we try to solve some of the lengthy questions. We understand how we prepare in full questions, revaluation account, then capital account. Let's see. Just a idea for you that how would you go in next video. This is these questions like partners, balance sheet is given, okay. You are given some of the information like this is, you can see it is given as informations are given, adjustments are given, we will get 1/8 share. So these kind of information, prepare revaluation account, partners capital account, balance sheet. So in next video we will discuss like these kind of questions, okay. So till now what you can do, just gone through with all the videos till now we have covered, and if you have any questions, any query, then please ask into comment section. I'll always with you. I'll definitely revert you back, okay. For my side I think this is all for today. Thank you. Thanks a lot.